Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and if the last 27 years have taught me anything about trading and investing, it's that the markets always seem to surprise you and keep you on your toes. Man, last week you had this longshoreman strike, which threatened to shut down the entire U.S. economy for months on end. I personally thought we were going to go 3 to 6 months of this, and all of a sudden, 3 days we resolved it. You've got conflict with Iran and Israel, you have crude oil prices surging to the upside, and remarkably, our broad market indexes remaining fairly stable. No major market swings to speak of last week. Now, this week may change things quite a bit. When I first show you our number one piece of information we're going to analyze for today, you're going to be like, oh, come on, Merlin, this is so boring. There's nothing here. That's right. There are only 53 companies reporting earnings this week. And on Monday, there's nothing. Tuesday brings you PepsiCo. Wednesday, you've got nothing. On Thursday, you've got Infosys, Delta Airlines, and Domino's Pizza, which has been just an amazing chart. And then the real fireworks begin. Now, a lot of people thinking with 53 companies reporting earnings, like, really, why did you even bring this up? Because there's always that kickoff to earnings season, and lo and behold, here we are with the kickoff to earnings season. It begins with some major financial firms, so we'll start things off with J.P. Morgan, Wells Fargo, Progressive, BlackRock, Bank of New York Mellon, and Fastenal. So you got 5 financial firms on the list, and Fastenal at the bottom. All I can tell you is it is going to be an exciting week, particularly if you're trading anything to do with the financials, or XLF could also be a big mover, so be careful playing with that space. But this is interesting because it may set the tone for our earnings season. Of course, that means going into the final quarter of the year could be very important. All right, now we'll move on to some more broader economic data. We're going to talk about rate statements. Now, of course, we know that the talk track at the present moment is that the United States is going to cut maybe by 25 basis points, maybe by 50 basis points on November 7th. But between now and then, we have quite a few announcements for other parts of the world. On Tuesday at 9 p.m. Eastern Time, we will get a rate announcement from the Reserve Bank of New Zealand. Now, what's interesting here is the expectations are that New Zealand's going to go from 5.25% to 4.75%, a 50 basis point cut, following the last steps by the United States. Now, is this a race to the bottom type of environment where central banks are going to cut aggressively? Well, hey, we got the unemployment number last week from the United States. Things look pretty good. Our data looks good. Even Jerome Powell said our data looks solid from the economic perspective. So why the big race to the bottom? Who knows? Bottom line is this will have an impact on the New Zealand dollar, maybe even the Australian dollar. So if you Forex traders out there, be careful on Tuesday in the wee hours of the evening, or late hours of the evening there at 9 p.m. Eastern Time. Now let's shift over to the last two pieces, which have been getting better and better and better, and that is inflation for the United States. Thursday at 8:30 a.m. Eastern Time, that is 1 hour before the markets open, the consumer price index numbers are coming out. And as you can see right here, we have on the hard red edge 0.2%. And we've been there for the past 2 readings. Well, what's interesting is the forecast says we're going to come out at 0.1%, so inflation getting lower than expected. Awesome. See things drift lower and lower. That means the market might have a nice big move to the upside. Why? Because optimism about the economy. But it's not just consumer price index, it's also the producer price index, which conveniently comes out the next day, Friday, at 8:30 a.m. Eastern Time. We have the PPI data. It also presently sits at 0.2%, and conveniently, it also is expected to drop to 0.1%. So both of our inflationary measures, which of course are, I would say these are secondary compared to the core PCE price index that Jerome Powell likes to focus the Fed's eyeballs on, but these are also very important numbers. This tells us, are the efforts by the Fed getting inflation under control? Now, one thing to keep in mind is we have this aggressive cycle of rate cuts, and then we plateaued for several meetings at the FOMC. And then all of a sudden, our last one, we dropped 50 basis points. Well, when will that 50 basis point cut jump in and start to impact some of these inflationary numbers? We have seen many of the commodities, and I mean most of the commodities, have surged up in value significantly over the past couple of weeks to a couple of months. So something to keep your eye on. While the data right now looks fantastic from an inflation perspective, and yay, we might meet our Fed mandate of 2% inflation, or target of 2% inflation, not a mandate, a target of 2% inflation. That sounds all exciting, but all of a sudden we may have inflation start to creep back in here in future readings. So this is good news from CPI and PPI perspective going into the month of October. We'll see if it continues on going forward. That, my friends, is your Monday Morning Must Knows. We'll see you next week.